Welcome back. Let's hop right into it with Bitcoin because it looks like due to the CPI data that was released earlier this morning, Bitcoin is pumping. Yay, exciting. Yes, we're going to go over that in a little bit more detail, but I really want to talk about Bitcoin price action. So when we take a look at our Bitcoin chart and we're utilizing Market Cipher, you can use Market Cipher. I don't care what indicator you use. Do what works for you. But we're seeing a possible trend reversal here. We have this purple triangle that was printed. So are we going to be getting a reversal from this mini uptrend that we had, or is this going to indicate that we're actually getting a longer term trend reversal? So one of the positive things that I'm seeing is we are above the EMA ribbons here. That is good. That is positive. We have successfully broken out of 42.3 here. Could we have volatility? Could we go back down to 42.3? 100% we can. However, I think it is important to note that we are not yet safe yet. I have targets of 46, 50, and 52,000. Once we break above 52,000, I'm going to be immensely confident. I'm not saying you should not get into alts. I'm saying please be very, very cautious because we can hit any one of these resistance areas and completely nuke. So if you're in any altcoin positions, I would highly recommend considering these as swing trades. Well, not really swing trades, but more like scalps, short-term stuff, maybe day trading. Because what's going to happen is if we do get rejected and we do fall down, you're going to lose a lot of value in your alts as well. We've seen a lot of these dumps take place when Bitcoin does decide to drop. Anyways, taking a look at our 12-hour chart. 12-hour chart is actually looking pretty good here. We're starting to break above some of these EMAs, and I'm starting to feel like we do have a nice chance to hit about $46,000. However, I really do want to pay attention to the daily close to see where we end up. Also, one of the things that is very important to me that's interesting is when we use Market Cipher, we look at these little bars down at the bottom. When we're in green, that means we're in a very, very bullish trend. When we're in red, that means we're in a very, very bearish trend. So we have not flipped this bar into green yet. Is that a make or break for me? Not necessarily, but at the same time, it is something I do like to denote. Anytime you have a trading or investing journal, you want to go ahead and make notes of these little things. And the reason why you want to do that is because you can always go back, refer to and be like, hey, this is what I saw last time. And it could help give you a little bit more conviction when you are doing your own stuff. We're starting to see a lot of positive buying volume, which is fantastic. I love that. But let's go ahead and take a look at the daily. So this is our daily chart. Everything is actually looking good. And again, we printed the granddaddy green dot, not the little one that's indicating some potential bullish price action, but the one that indicates that we found a potential bottom from over here down at about $40,000. So that's positive. Things are looking pretty good to me. However, we still do have quite some work to do. And again, I am going to anticipate some volatility about 46.5 because we do have a lot of resistance there. Overall, the market's doing okay. I think it's okay to start entering into alts if that's something you're interested in. However, make sure you have a trading plan and make sure you have areas that you're willing to cut your positions if the market starts to tank. Let's go ahead and take a look at some of the CPI info because I have a bone to pick with mainstream media, believe it or not. Actually, before we do that, I just wanted to go ahead and pull up coinglass.com. Reason being is because it's a great free resource. You can see all of the different liquidations. You can see who's trading and doing what. And as you can see, we have a lot of shorts that were liquidated. So it looks like people are starting to go long now. That is the trend. But at the same time, there's a lot of folks that got caught shorting very late and got absolutely wrecked. This tells me a lot of people are using too much leverage. They are not utilizing stop losses, which I have no idea why. But anyways, the trend is your friend. Pay attention. If you're not sure what direction the trend is in, take a step back. There's no need to revenge trade. It never ends well. The amount of times I have been liquidated from doing that is disgusting. Don't be that person. Sometimes just take a... Okay, let's talk about the CPI data. The CPI data is kind of scammy, if you will say. And one of the reasons why it's scammy, because they go ahead and they include important things that make them look good, but then they'll remove things that make them look bad as it suits their needs. So CPI stands for Consumer Price Index. If you want to learn more about what this is, go to Investopedia, 100% free website. But let's talk about the pros and the cons out of this story. So inflation rises 7% over the past year, highest since 1982. So we're in a lot of trouble here when we're talking about inflation. Inflation isn't necessarily a negative thing all the time, but in this case, this is really bad. This is not a good thing. However, this article from CNBC doesn't break down some very important information. In order to get this important information, you need to Google search, and we're going to go ahead and go to our next page. I have disappeared from the screen because I want you to be able to see this entire document. So, U.S. Bureau of Labor Statistics. And again, this is an official government website. And the key piece of this information is real average weekly earnings increased 0.5% over the month due to the change in real average hourly earnings combined with an increase of 0.3% in average weekly earnings. So basically, we have seen a 0.5% increase in December, when in November we had a 0.8% increase. So the increases have slowed just a bit. This is still not necessarily positive long term, but it is important to note. And it's very hard to kind of pull this information because I don't think that this is written in plain English. So that's why the market is starting to do a little bit better, in my personal opinion. Let's go ahead and talk about some cryptocurrency projects I'm bullish on for 2022. The first one is going to be POKT Network, POKT. So this particular project was referred to me by a couple of my buddies. I said, okay, send it to the vetting team. Vetting team said this looks great. So we went ahead and aped in OTC about a day or two ago. Prior to a day or two ago, you had to get it OTC via Telegram. And the process was a little bit scary, but at the same time, it ended up working out. Again, OTC trades or transactions done on Discord or Telegram are super risky. I don't recommend anybody do those unless you really know the person. It's something I took a risk on. But anyways, this project is going to be listed on exchanges today. I want to say they listed on OKCoin. And I do think it will perform well in 2022. Of course, if we do go in a bear market, it's not going to perform well, but I'm very bullish on it. And I will be making a moon bag as fast as possible. However, I'm not telling you to ape in right now. This is not a buy signal. I'm just kind of sharing what I am doing. And one of the cool things I like about it, let's read the description here. So POKT Network is a blockchain data platform built for applications that use cost-efficient economics to coordinate and distribute data at scale, enabling seamless interactions between blockchains and applications. With POKT, the use of blockchains can be simply integrated into websites, mobile, etc. So I know it's kind of like a complex explanation of what it is, but if we go to the website here, it's basically going to be a product for Web3. And it sounds like that they're going to be offering some sort of interoperability of this. They have Ethereum, Polygon, IOTX, Avalanche, Binance Smart Chain, Gnosis Chain, Fuse. So it looks like they're going to be doing a lot of really cool things. I'm going to be bullish on this project as of today. And yes, I will be taking profits like an absolute savage and creating a moon bag. Again, you guys, anything that is brand new and listed on an exchange, they generally run and then they have a little bit of a drop, they consolidate, and then the market kind of decides what direction the project will go. So I just wanted to put that out there. And another project I'm bullish on in 2022 is one of my partners, SingularityDAO. And they're doing a lot of really cool stuff, a lot of really great things. But one of the awesome things that they're offering is their Dynaset, which is very cool because it kind of helps you make great trading or investing decisions during a bull or bear market. Of course, nothing is 100%, but at the same time, if you're a brand new investor and you're going to be very stubborn and want to get into alts or whatever it is, you want to kind of focus on things that could help you potentially perform better. But of course, you always want to do your own research. Let's go ahead and take a look at their performance of Dynaset. So first, let's talk about SingularityDAO. It is a DeFi protocol designed to remove the stress of choosing which projects to invest in, the fear of market cycles, bears, downtrends, volatility, and the hassle of constantly managing and updating your portfolio. All troubles currently associated with decentralized finance and cryptocurrency. 100%. DeFi is amazing, but oh my, it is very hard to navigate. And SingularityDAO has a really cool thing called Dynaset beta that has been actually performing really well despite the bearish price action. So basically Dynaset, it manages your assets for you. And they state here, you can think of it somewhat like a basket of tokens that automatically rebalances by a combination of humans and AI, incredibly similar to hedge fund and traditional finance. So basically they're using people and they're using AI to kind of rebalance different portfolios for you. Of course, there are risks associated with this type of stuff, but at the same time too, if you can do your own research and you can kind of navigate and understand how these things work and check them out before dumping money into it, you're going to do a lot better in the long run. So they had a successful beta launch over here. And as far as some of the statistics here. DYN BTC, negative 0.5%. Bitcoin is down 10.47%. And Dynaset shows 9.97 better performance versus just holding Bitcoin. For Ethereum, Dyn ETH, negative 1.68. ETH is down 15%. Dynaset shows 13.32 better performance versus just holding Ethereum. And then they have a chart over here with Dyn Sing versus NTX, SDAO, AGIX, and Ethereum. And lastly, I want to talk about Tom Emmer. He is really, really going to battle for us. Like, I support him. I love what he's doing. I'm very, very thankful we have somebody that's speaking on our behalf in the crypto space. So he tweeted this: today I introduced a bill prohibiting the Fed from issuing a central bank digital currency directly to individuals. There's a lot of issues with a central bank digital currency because it's not going to be private. All your information is going to be out there, but there's going to be caveats. They're not going to show the information of what politicians are doing or government spending, and that's going to be a problem. So as Tom kind of goes through this thread here, this is probably the most important tweet. Not only does the CBDC model raise single point of failure issues, leaving Americans' financial information vulnerable to attack, but it can be used as a surveillance tool that Americans should never be forced to tolerate from their own government. Requiring users to open an account at the Fed access a United States CBDC would put the Fed on an insidious path akin to China's digital authoritism, which I agree with. Basically, what this US digital dollar will do, they're going to be following what you are doing. Yes, we know that they're following us anyways, but it's going to be a lot more invasive. And at the same time, you guys, we've said it time and time again, once a law gets passed, it's very, very hard to repeal. And we all know when they push this bill through, not Tom, but the people that are for the CBDC, it's going to be problematic. And the reason why it's going to be problematic, it's going to be like a 1 million page bill. Yes, I'm exaggerating, but it's going to be so big and it's not going to be in plain English. And a lot of people are going to really get screwed. Really get screwed, because when things are not written in plain English, like we saw with the CPI report, it's very confusing, and it's really not fair to those, because when we look at traditional schooling, we are not taught to learn a lot of this legal jargon that is pushed into bills, which makes absolutely no sense, because if you're pushing a bill and it's not in plain English, it's going to be a problem. And I think that they're going to be doing this with the United States digital dollar. So for now, I would not be supporting it, because I would want to see the caveat that government officials are going to be required to use these CBDCs, and everything they do is under surveillance, because they're the ones that are taking the money and running, and they're the ones that are not spending properly, and they're the ones that are getting their pockets lined to push initiatives that do not serve you. Thank you so much for watching the O Show. Make sure to like, subscribe, and set alerts. I will catch you later. Bye-bye.